Welcome to the first episode of Debt with Dummies Intuitive Discussions.
But I do feel a little bit that this has been a bit of a red herring. We're in a world of complete uncertainty. We have literally got the consumer and the taxpayer at the edge of a cliff. Why are we not talking about that?
We wait for everything to fall apart before we try and put measures in place.
We're entering a scary world, and economics is just one part of that.
If we hit rock bottom, we can only go up from there.
Since 2016, there has always been an article that says, time to tighten the belt. And it is starting to get a little bit tiresome to tell people to keep cutting. They're like, where am I supposed to cut? I don't know. When do we stop telling them to stop cutting? Like, rich, there's just nothing more to.
Consumers were living on hope and things are going to improve. We've pushed our middle class far over the edge. I think 5% cut in interest rate will save us.
5% decrease in interest rates and retirees have enough money.
And by dummies, we refer to your hosts. I am Corrie, the most intuitive dummy.
And I'm Zach. I'm so dumb that when I went to Hollywood to see the stars, I took my telescope with me.
Zach, what is Intuitive Discussions all about?
Corey, we're here today to dive into the economy, what's happening around us in the world today, and how that impacts us on a day-to-day basis. And look, we're linking up with some experts on various subjects who have rather unique insights. They come from different industries, different perspectives, but we want to look at the South African challenges that we're facing every day. And we want to try to dig a little bit below the surface. We want to see what these different views can bring out for us, see what these opinions can reveal to us on the topic that we're going to cover. And today, particularly as we look at the impact of what's happening in the economy right now, and also how that trickles down to consumers and people in debt review. Yeah, we want to get these opinions and learn from them.
Yeah, let's fire away. Can we get some guest introduction today? We're very blessed to have some guests with us. Tiaan, introduce yourself, please.
So just for everybody online, I'm Tiaan Hattingh. I'm the CEO of iPDA, also the chair of PDASA. I think like many people here, man of many hats.
Thank you very much. Maya, if you can introduce yourself.
So I'm Maya Fisher-French of Maya on Money, known I think as a personal finance journalist, but also a journalist who's focused a lot on the debt review industry and debt counselling, hopefully bringing forward some of the views out there, because I think it's an industry that has huge potential, but has its issues.
And last but not least, Casper, if you could introduce yourself.
Hi, I'm Casper Grange. I'm one of the NEC members of DCASA, the Counselling Association South Africa. I've also been a debt counsellor in the industry for over 15 years. And my unique focus on the industry and getting us all together, I think, has been one of my pillars over the last 2 years.
Thank you, everybody, for joining us. And let's fire away. Let's talk tariffs and Trump and hikes. Let's start off with that. So we've got a lot of stuff happening in South Africa at the moment. We've got the electricity hikes coming up, and we've got the petrol price up and down, and tariffs from imports. Let's have your view on the tariffs. What are we talking about? How's things going to happen in South Africa going forward?
I'll kick it off. I'll just tell you from here in the Eastern Cape, obviously it has a massive effect on consumers, consumer income. We're seeing retrenchments at places like Mercedes, and that has a fall-on effect on different other industries that supply Mercedes. And if you've got retrenchments, the whole little microeconomy is starting to go down. There's less spending and everything filters down. We're seeing a middle class that's so over-indebted already. These outside effects onto South Africa is killing our middle class. So yeah, it's very concerning from a debt counselor's point of view, from sitting in a town like East London, where that really is a bread and butter of a town. Now, if we take that to where BMW is, where VW is, those car manufacturers are directly impacted. It directly impacts our workforces. Where are we going to create more jobs for these people that are now sitting without jobs? And I think that is my big concern from where I sit as a debt counsellor.
Perhaps I should jump in here. And I think one of the biggest issues we have is the uncertainty. It's on, it's off, it's on, it's off. We don't know. We actually are sitting in this world of complete uncertainty, and there's nothing markets or businesses hate more than uncertainty. If we knew exactly what we were dealing with, we're mark the plan, right? You can work with it, you can plan. But the fact is, we're all just sitting like deer in headlights, waiting to be hit by a car that we're not sure is coming or not. And I think that's for me, the biggest challenge. And certainly from a stock market perspective, there are pensioners, people who are coming up to retirement who are not actually sure what the value of their retirement fund is because it keeps changing on a daily basis. I think for me, this incredible uncertainty is probably one of the biggest challenges. And then, of course, we don't know how our Reserve Bank is going to respond to these challenges. Are they going to stop their interest rate cuts? We already saw rates not being decreased. We were expecting them to have been decreased in March, and now we didn't get that cut. Is this it? A lot of people were hoping for those rate cuts. So I think it's this uncertainty for me that's making me very anxious. And what does that mean for the consumer going forward?
It's probably not just the consumer, right? We all have our different roles as individuals, but also so the uncertainty also hits immediate. So I always say, as a parent, everything we do and say actually will affect somebody. We will affect the way that our kids are going to respond to other adults. And I think that's responsibility of people in any form of power, just to make sure that the way that we are responding is responsible. So directly on a business, if the rand to the dollar is affected, the costs of everything that we do from our businesses, it's across the board. It's not just going to relate to the PDA. It's going to be on imports and everything like that. So to your point, so the Reserve Bank not cutting interest rates, I think that was the responsible thing, just because they also uncertain of how to respond to this. The uncertainty of the VAT is just adding to that. But I think that's the big thing, is how do you plan while there is so much, and it's not just South Africa, but there's so much uncertainty on tariffs worldwide currently, and everybody needs to respond accordingly.
Let's dive into South Africa, because there has recently been a little bit of something similar, some chaos about the political setup, who's aligned with who, the chaos about VAT, will it, won't it, all that sort of stuff. It was brewing over several weeks and months now. Do you think this is doing exactly the same thing that Trump is doing international scale? We're seeing it locally.
No, I think like Maya said about uncertainty earlier, it made me really think uncertainty in our politics. If we don't create a stable outcome, a stable output look to the rest of the world, then the markets fluctuate and people don't have trust. And who's the new combination going to be? If the DA moves out, what's going to happen in our politics? Are we going to see a socialist economy going forward? And that will be detrimental to all of us, especially in the financial industry. We will take a major knock. So the uncertainty is definitely our biggest fear, not only for the consumer, but for the world at large. And I think with the Reserve Bank not cutting rates and talking about the impact that the possible VAT increase will have, the possible creep on the tax brackets, all of that will have an impact on the consumer and will cause inflation. And if inflation's there and we don't have more income, what are we going to do? Everybody suffers. And the middle class, in my viewpoint, for the last 2 years, is carrying our country financially. So if we kill them even more and we chase them away, what is going to carry the rest of our country? Who's going to pay the social grants? From where are we going to pay them? So we definitely need to start looking inward. Politicians need to start looking inward as well and say, listen, we need to start saving South Africa. Let's cut budgets. Do we really need 20 VIP officers where people can't even lay a complaint at your local police station because there's nobody on duty? So we need to start looking at the basics, start from the bottom up and really look if we need all of these departments and how do we get our small and medium businesses going, because that is going to energize our markets again.
Casper, you mentioned it, and it kind of ties in with Maya saying the uncertainty, and you mentioned the VAT. Now, uncertainty and VAT, I think those are the key words these days. And I know, Maya, you're very passionate about this subject. So let's hear from you. What do you think about this whole, maybe VAT increase, maybe it doesn't? What's your opinion around that?
Firstly, talk about uncertainty for businesses who literally do not know if they're putting in that 15 or 15.5% on the 1st of May. It's ludicrous, right? People have to plan for these things. So yes, on the one level, a huge amount of uncertainty for businesses and for consumers. But I do feel a little bit that this has been a bit of a red herring. Yes, that 0.5%, it's an increase in tax, right? Not great. No one wants an increase in tax. We're talking like 5 Rand on 1,000 Rand bill. That's what it's going to go up. No one's talking about the 34 billion that government has increased our taxes by not adjusting the tax tables by inflation. No, that hasn't even been in the conversation. I haven't heard the DA raising that. I haven't heard anyone talking about it. And that impact is much bigger and it's very far reaching. When I did some of the analysis on it, it showed that the bottom income earners, which sort of around 8,000 Rand a month, are going to draw into the tax table simply by having an inflation increase. And these are some of the things that no one's talking about. Yeah, and I would really love to see us starting to talk about the fact that income tax has got to a point where, by its own admissions, Treasury says we can no longer push income tax up, because when they did, you'll remember they increased the top tax rate to 45%. They saw a reduction in tax compliance. They started to collect less money. So we have literally got the consumer and the taxpayer at the edge of a cliff. And why are we not talking about that? Why are we not talking about the fact that for anybody earning a salary in South Africa, they are now physically paying more tax over the last 2 years? So I think for me, I have a lot more of a problem with that than I would with a 0.5% VAT increase. Because remember, you could choose not to spend. Obviously, there's going to be zero-rated goods for lower-end people. But most tax VAT falls on the top 3 percentile spend bracket, so wealthier people. And you can choose to some degree to spend less. You can't exactly choose to earn less, right? So I think for me, I would have liked to see a little bit more emphasis on that rather than just on the VAT increase.
I think just we have been in a few collections meetings with the banks and everything like that. And something just highlighted while we're chatting. And one of the things in our country is our use of cash. So remember, people that earn cash is not necessarily paying their dues. So yes, I think pushing from a Reserve Bank side to say, listen, what is a more affordable collections and payment method is one of the things that they are looking for the fintech companies to. They're looking to the banks to solve. But one of the things that's a very easy solve for that is a VAT increase. So to your point is to say, listen, you can't really not pay it. If I'm going to pay specific things that has a VAT impact, I will be paying that. And that will actually allow more collections via VAT. Yes, a 0.5%. I think the way that they're approaching the VAT is a disaster. And why I'm saying that is for us as system owners, regardless if this is implemented or not, we are spending money to develop and make ready for these changes that need to hit. So regardless, that would be either a wasted expense or something that we've improved our systems on, making sure that we are not compliant to it. So the big thing here is I tend to agree with you. Yes, the VAT will have a small impact, but I think that small impact over a lot of our bills. So I think most of the debt counsellors asked us, listen, can you calculate what the average change will be to their contribution amounts? And depending on where you are on contribution amounts and how many credit providers you have and how many VAT entities are registered on our systems, it's anywhere between 2 Rand and 10 Rand that you're going to spend. But I think what eventually happens is if I have many accounts where it's all 10 Rand, then suddenly I'm at 200, 300, 400 Rand, where, yes, now I need to start making decisions. Can I afford specific things because of the VAT increase that I didn't have a choice about? But I understand the country has to make specific decisions, expense management.
Of course, the decision was not to push the rates up. All of this, of course, when you see chaos in the background, be it political chaos, or you see a man with a pen causing chaos on the other side of the world, that's impact on you. Sometimes it takes a while for those effects to be felt. Do you think that we're actually in the midst of an economic freefall and we just haven't noticed it yet?
Oh, loaded question.
That's for you. I just want to...
We really don't know, because it all depends on what the outcome is. I think what we do need to understand with tariffs, and this is something that unfortunately the President of America seems to be oblivious to, is that we live in a world that takes many people in different countries to make one thing. I can't remember exactly. Somebody did analysis on the iPhone. We are a global and integrated, and it's great that we're globally integrated. Now, how is that a bad thing? Are Americans only going to consume products made by Americans? Or is that they're going to have all the skills there and in their country? So if you start pushing up the prices across the board, it's just going to make everything a lot more expensive for consumers. So that's the bottom line. I don't see how else we escape from that. There's a lot of conjecture about where we're all going with this and how it's all going to play out. But at the end of the day, the last time we had a tariff war, it resulted in the Great Depression. So yes, we're playing with fire right now. And I think it's what we're going to see is what is the outcome of all of this? What is the outcome going to be? And I have to just tell you, I did spend last night, which was not a good idea. Don't do this before you go to bed. Watching the inquiry into Facebook. There's a whistleblower about what Meta has been doing for the Chinese government. Then I went and I watched the fact that his team are now looking at him getting a third term. So we have some much bigger issues around dictatorships, about global security or security breaches in terms of national intelligence. I think we're entering into a very scary world. And I think economics is just one part of that. I'm not feeling that comfortable right now, I have to tell you.
So you read a horror story just before you went to bed, Maya? Just like,
Exactly. I did not sleep well last night.
no, that's a different Alice in Wonderland tumble to take down just before you go to sleep. Yeah.
So let's bring it back to debt counselling, all the increases and all those type of things. So we're seeing a lot of increases in things in living expenses and that type of thing, but do we see a rise in debt counselling consumers, Casper, from the DCASA side of it? Do you see any increases? Do you get the stats? And
Oh, we wish we could all get the global stats, but I must say the PDAs are suddenly starting to provide us that information, obviously keeping the private information off, but that we can start seeing what's happening. We're not really getting the data from the regulator, but now at least we've got data to start looking and comparing. I think my major concern, consumers are applying, but consumers are applying too late. We are picking up every third consumer applying has legal action on an account. So they should have been with us a year ago. Consumers were living on hope and things are going to improve. Yes, last year interest rates were going to come down and they were living on hope. And we human, we South African, we always want to make a plan. We always hope things will be better. And now with the rates not coming down as significantly as everybody hoped, I think we've pushed our middle class far over the edge. If we look at debt to GDP, I mean, over 75%, hoping to stabilize at 77% with all this Trump things. If you look at your debt to GDP and you look at your middle income consumer to your high income consumer, we now almost on the same level, in my view, from the consumers I see. So where is this going to end up? Are we going to see with consumers that just can't apply for debt relief anymore because there's legal action on the assets? And what's the banks then going to do? Just put all the assets on the market and then our whole economy collapses. So that's the conversation that's starting to happen from where I'm sitting on a DCASA point. And I'm concerned about our economy. Yes, I'm concerned about the consumer, but we're not adjusting. We're reactive. We're not proactive. I think we must come to a stage where we are a lot more proactive. Yes, I think with the task teams being revised, I think with DTI starting to move a lot closer to our industry, is brilliant. But once again, it's reactive. We wait for everything to fall apart before we try and put measures in place. And we all want to run down our own little avenue and we forget why we're running down this avenue. It's our economy and it's our consumer. And if the consumer suffers, where is the money going to come from to pay for government officials, to pay for social grants? We must really start looking inward and start sorting that out. But yes, the consumer, I'm very worried. And it's not just the guy on the street. It's the doctors, it's the attorneys, it's the advocate. Everybody is down and out. Are they speaking up quick enough? Definitely not.
I want to jump in there if I can, Casper, because one of the things that I pick up is that you're talking about legal action taking place. Consumers think that when the creditor goes quiet, the debt's disappeared. What they don't understand is that's when legal processes started. When the minute your creditor stops nagging you and stops communicating, it means they've handed you over and it's now legal. And I see a total and utter misunderstanding of that. People are like, oh, the problem's gone away. No, the problem is just about to get a hell of a lot worse. So in fact, if your creditor stops nagging you, best to get into debt review very quickly because the lawyers are lining up now. And I think that is something that I don't know, Casper, I see as a big issue. People don't understand that banks will follow through, credit providers will follow through with legal action. It's not like you're just going to get away scot-free.
And I think another thing to add, Maya, that I've picked up in the last 3 weeks is, yes, the collectors go quiet, But I've picked up in the past, a summons would expire after a year and you need to re-summons. Now that law has changed. A summons, as long as the summons is served, it's open. So I'm picking up 3 years ago, summons have been served. And now the bank just keeps that summons so their deed doesn't prescribe. And we're going to sit at a stage where I hope it never gets there, but half of our consumers going to have legal action on there. Where is the banks going to borrow to? They won't be able to borrow to anybody. And then what? Then they won't be able to pay staff. And then we've got a vicious cycle that's happening. So I really think there must become a stage where debt counselling is trusted, where the process is followed through sooner rather than later. Get those consumers back on their feet, get them back into the credit market. But waiting too long, the education needs to happen. And you sit on different panels, so a lot more what's going on there. But education is not given to the consumer quick, and the correct information is not given over to the consumer efficient enough, in my view. There's only so many consumers I can speak to in a day, or that debt counselling can speak to a day, but it's not reaching the tip of the iceberg. And unfortunately, the people educating the consumer, who is it?
TikTok.
Yeah, it's the worst education you can get.
Casper, counterpoint. I often hear the banks saying, no, people are entering debt review too early. Now, obviously, there's two ways to enter debt review. One, you go to the debt counselor, they say, you're already in trouble, you're over-indebted. The other is you go to a debt counselor and they say, it looks like you're about to become over-indebted. You're about to hit the trouble. Maybe your circumstances have just changed and that is about to happen now. But when we talk to the banks, a lot of the messaging that we're getting is, no, these people shouldn't be in debt review. They weren't in distress. This is not an actual need for debt review. Do you think that's something that's happening?
Yes, where the toast is buttered really on both sides. We're sitting with, I don't want to say fly-by-nights, but there's big institutions chasing consumers that don't enter consumers the right way into debt counselling. And they are signing up numbers instead of really looking, rehabilitating a consumer. And by doing that, throwing a net and see how many fishes you can catch, you're naturally going to catch fish that really aren't in our space. I've come across quite a few. Maya has probably come over across a lot more than I do because people want to speak to instead of a debt counselor, because debt counselling is a bad thing that put them there in the first place. So there's a lot more consumers that need debt counselling, but I think the fish nets that's going out is catching the wrong people and they're doing it incorrectly. And once again, we need to pull back. Education is key. We need to put trust back into debt counselling. And it starts with our industry ourselves. It starts with their counselors. We need to be upstanding people that people can trust. We put people under debt review that need the service. We educate the consumer that's under debt review that wants that help and put them back on their feet. Until we create that trust environment, you're going to have half the people under debt review don't need debt review. And the majority of people that actually need debt review is also not under debt. So how do you deal with it? Or we start with education and we start with fixing our industry. And I think over the last years, like we as an industry has really come together, start doing the right things. The regulator, even in the past, my trust was completely gone. There is a little shimmer of hope that we are doing the right things. Industry is doing the right things. There's still a lot of work to be done, but we need to fix the trust. Once we fix the trust, we need to add the education. Once we get those things right, all of the fly-by-nights, I hope, is out and we're doing the right thing by the consumer. Then the correct people will apply for debt review. So I can hear the banks and I can agree because I've seen it. Wrong people are signed up. But I also know there's many other people that should have been under debt review that aren't. So I know this doesn't really answer your question the way you might have wanted to, but that's what I'm seeing.
Well,
I
Pardon?
talked over you.
No, absolutely. This is something that obviously we've even discussed before, but I do think we've got to come back to this thought of if almost half of everybody in the country is handling their debt in a very bad way, then don't almost half of the country need debt review? Isn't that what we're saying? Because at the moment we've had about 1 out of every 60 people in South Africa touch base with debt review one way or another. But we actually maybe should be talking about 1 out of every 2.
One of the credit providers came out and said, they see at least 4 million people should be under debt review. So
Look,
if a bank says that,
Yeah, can I jump in here?
Yeah.
I'm not as bullish on you with you on those numbers and what negative or which way you want to look at it. Because I think I do work with people, and when some people who think that need to be under debt review, actually just simply putting a proper plan in place, doing a budget, sticking to it, they're able to solve the debts themselves. And it's a lot less onerous, obviously, than going under debt review with the legal, once you're in, you can't exit until your debts are paid off. There's obviously, it is onerous. So I would say definitely 1 out of 2 people are struggling with their debts, but I think many of them could be solved with proper discipline, proper doing budgeting, applying just some sort of a common sense approach to their finances. But there are certainly people who simply cannot. Their debt repayments are such that they cannot survive, even on a basic budget. And those certainly need debt review. And I think to Casper's point, I am unfortunately seeing people being talked into debt review under false premises. Oh, we'll lower your interest rates, right? And oh, we're from the NCR. And we've been told by the NCR to contact you because you can pay less interest rates. So they've sold the lie. Okay. And that is where the banks are very concerned. And it's a huge bugbear for me. And it's something I've been obviously raising a huge amount. And as a result of those tactics, people who genuinely need debt review are anxious or are not prepared to reach out to a debt counselor because they've heard all the negative stories. It is imperative, and I said that right in my intro, I believe when debt counseling came out, I have followed this journey right from day one. I thought it was, and I still continue to believe that it is an incredible opportunity. And it's we're one of the only countries in the world that offers this. It's a remarkable system, but unless we fix it, it's not going to deliver on what it really can deliver on. And that concerns me. It concerns me that those rogue players, plus the way that the act is constructed at the moment, makes it very difficult to get more people into debt review who really need it. And that concerns me.
So Maya, what I just want to add there, I think that's exactly the thing. There needs to be more education. I think we've been talking in industry, at some of the industry discussions, there should be a grace period. Me and Zach had a conversation a while ago in Cape Town, and Zach really got my mind thinking on that. There should be a space where a consumer's debt should be reviewed, but not necessarily being under debt counseling. Like you said, educated, all of that. And then those consumers that we can see out of that review process, let's call it a 10-day process, but you can really get to the gist of what's going on with the consumer's life, bank statements, sit down with them, have a general discussion. And then those guys that really need it from there on, from a debt reviewing point of view, put them under debt counseling if they actually need it. But then we should start using the words like, I loved how Zach put it, let's start putting names to something, and then let's push the discussion. And I think it's so important that education happens. And that's what I'm getting from you too. What you also do a lot is educate consumers. Like you say, some of them don't need debt counseling, but there is a majority that need debt counseling that's scared because they're not educated. They don't know, and they hear all the bad stories. And we need to drive the conversation to fix that. And we need to fix the industry in ourselves and start pointing inwards and sort out the guys that aren't playing game.
So, Casper, I want to move on to large debt counselors. You mentioned there's debt counselors out there, they are signing up the wrong clients. Then you've got the smaller debt counselor that don't have that capacity to advertise. Are those smaller debt counselors in trouble? Maya, I'd also like your opinion if you from a non-debt counselor point of view. So, yeah, do you see the smaller guys are struggling a bit?
Casper, do you want to take that first, or should I kick off?
You go first, Maya. I've got a lot to say on this topic.
Yeah, so that's why I was hoping you'd go first. But my general comment is I speak to, obviously, it is a numbers game. And based on the fees, this is the one problem with debt counseling, is that you've got a consumer who can't afford to pay their debt, who now needs to find money to fund the debt counseling costs, right? So on one hand, you've got people who need to the debt counselors need to be paid for their work. You can't do things for free. But where does the money come from? And I think that is one of the big challenges. So obviously what we've seen the growth of the mega debt counseling businesses, which can sometimes be driven by call centers, which upsets the NCR and all the rest of it. But that is how you do it affordably, because you have the volumes. Then I come across some of the smaller, really good quality debt counselors, and they are people who have such a passion for working with people. And they're like angels out there. They really care about their clients. But realistically, it's hard for them to come out and to do the job properly based on the fees as they currently are. So I think for me, that is really the big challenge, because if you are somebody who's over indebted, who's struggling, there is nothing more wonderful than having a coach, having a guide, somebody who takes you through it, but who pays for that? And I think we've been through this conversation as well, Casper, where it's, should there be more funds coming from the industry? But the industry are saying, we're already cutting our rates, right? We're already cutting interest. We're taking a haircut on the interest rates. Why more money? And I think one of the opportunities, and I sit on the FSCA Consumer Advisory Panel, and it's one of the things that I put forward, is on consumer financial education. How about all the money that the financial institutions have to pay towards financial consumer education? Some of it could be earmarked for people in debt review, so that they're getting that additional financial education that they really need, that perhaps the debt counsellor doesn't have time for because it's not in their fees. So is there a way we could tap into that financial education fund to help people in debt review? Because surely if you can get the people who are over indebted better able to budget, better able to manage their money and educate them, that is really a good starting point. I don't know. That's just one of my ideas.
Maya, I think that's a brilliant idea, but how do you drive that to be fair? Because unfortunately, once again, you get the big role players that will just roller coaster the system. And yeah, the small debt counsellor there is. And my long-term view on debt counselling, I've shared this with Zach before, is a debt counsellor should be like a doctor. And I think some of the bigger guys agree with me, but not fully, where you've got, let's call it a medicross. You've got multiple doctors working at different sites across the country where they can sit and deal with the consumer. And then you've got the independents that sit there, but you've got the continuous flow of consumer assisting them, educating them, and put a limit to how many consumers a counsellor can realistically assist in a month and deal with the backup systems. But the smaller debt counsellors, the medium guys even, they are the ones that really fight for the consumer, that believe in the consumer, that want to do the right thing. And then, yes, you get the bigger guys that just throw a blanket and they don't really care what the outcome is. What about the consumer afterwards? We just get them through the sawmill and get them through what happens with them after. We don't care. And I think there must become a space where a debt counsellor is really trusted by courts, trusted by banks, and definitely trusted by consumers to say, I want to go to a debt counsellor. And all of them are seen like the smaller guys looking after the consumer's well-being, their finances, educating them, putting plans in place. But once again, we need finances for that. And the bigger guys that's just running through the system, maybe there is space to allow the different areas in a jurisdiction to have certain debt counsellors you can only deal with in that jurisdiction. Maybe we must go that route, that you've got a debt counsellor you can approach. Because what's one of the biggest problems? A consumer gets caught, he sits in, let's call it Graaff-Reinet, and his debt counsellor is in Durban or in Cape Town or in Joburg. He's got nowhere to go to. Maybe we must be able to put the smaller guys in the jurisdictions and get the consumers to approach them. I know the bigger guys won't always like it, but maybe then we go towards a system like doctors, where we have a medicross in the big cities. Maybe we have I don't want to call debt counselling firms out, but maybe we have big firms that then open the branches for consumers to approach, because it is important that the consumer gets the right advice. And if we get rid of the smaller guy because they can't afford to keep their doors open, we are going to lose the guys that really do the job correctly in favor of the consumer.
We'll just say, as a marketing strategy, when you're a small debt counselor, you say, don't go to the big debt counselor. I can pay you lots of personal attention. And of course, when you're the big debt counselor, you say, don't go to the small debt counselor because I have so much weight and authority behind me. I've got the numbers to really get stuff done for you. So the pros and cons on both sides there. But Casper, yeah, I do hear what you're saying. Even the National Credit Act asked the NCR to open up offices provincially. And they would be able to be accessed by consumers easily. But we haven't seen that happen. Of course, you pick the phone and find the head office there. But what about consumers? We're getting a bit stuck in on the debt review side. I want to go back to consumers and talk about what's happening with them. Corrie, we were talking a little bit about consumer budgets. If you look back a year, 2 years, 5 years, our budgets all look a little bit different than they used to.
Sure. Maya, you take that one.
Yeah, sorry, I wasn't sure if Zach was asking Corrie that particular
Corrie, yeah.
You know what's quite interesting? I went back and I looked on my website at articles that I've written over the last sort of 10 years. And since 2016, there has always been an article that says, time to tighten the belt, right? That's the reality. It has become more and more expensive to live. Times have got tougher. Salaries have not kept up with inflation. In the middle of it, we had COVID. Interest rates soared. It's actually been tough for a very long time. And we started off this conversation about the world of uncertainty. It is not about to get better anytime soon. And it is starting to get a little bit tiresome to tell people to keep cutting because they're actually like, now where am I supposed to cut? And one of my big concerns is that people genuinely cannot afford medical schemes or medical aid anymore. These are really important life insurances that you need. A friend of mine's husband is in ICU right now. The bill's R1 million. If he didn't have medical aid, where would that leave him? So I think, getting a little concerned that, and I think that's one of the points, is that we just keep telling people to keep cutting. But really, we've been telling them that for 10 years. I don't know. When do we stop telling them to stop cutting? Because there's just nothing more to cut. And I think we're there. And that is, of course, why we're seeing this massive increase in debt. Because people simply cannot continue to afford their lifestyles. What is happening is that rather than adjusting downwards, so yes, we've been telling people to cut, but they don't listen. Nobody really, the first thing people do is they don't go and cut. They keep spending. And credit cards, of course, are literally designed to do that. They are wonderful tools for banks to create an annuity income for life because you're going to spend 10,000 Rand on your credit card and you only have to pay back maybe 600 Rand a month. So it makes it feel affordable. And people have funded their lifestyles for many years now using their credit cards, and they're now maxing out. They're now no longer able to keep rolling that over. And then we see this huge increase in personal loans, debt consolidation loans. And so, yes, I think the party should have been over 10 years ago. We've stretched it with the credit card. And now really the chickens all are coming home to roost. I think that's, to me, the environment we're in now.
Once again, I think we are reactive with legislation, with all of that. I think there should be a lot more proactiveness. We saw it actually now with minimum wage. And like I said, 5 years ago, was there something like minimum wage? No, it came about 3 years ago. But now with the bracket peak, what about the middle class? And I'm going to hammer on the middle class because I believe that is where South Africa is suffering and that is where we need urgent relief. Even in the NCA, Regulation 23A, that table has not been adjusted. So a guy or family earning 25,000 Rand a month must spend less on groceries than a guy with a minimum wage. That is almost not happening. Like I said, we can't keep on telling them to cut. We are at a stage where consumers are prioritizing shelter, food, electricity. Now, even just access to electricity you need to pay for. So what's going to happen? Where is it going to end? Government needs to cut their budget. Let's see if we can put government under it. Maybe that will solve the problem. But I think the consumer can't. The consumer is hurtful. The consumer can't afford it. We can't tell them to cut anymore. There is no way. Yes, a little bit of fuel, petrol price reduction helps. And I don't know how it happens, but it's really saved a lot of our consumers, I think, over the last year. When the fuel prices come down, there's something that is hitting us as a consumer, the add-on to access to electricity. We had a fuel price decrease. And I think if it wasn't for that, I think the tipping point would have been a year ago. So consumers can't cut anymore, guys. Government needs to cut. Let's lobby to put government under debt review.
And Casper, maybe to be a little bit contentious, but our interest rates are very high. And yes, you want to have high interest rates in a world of uncertainty, but we have the highest real interest rates ever in the history of South Africa. Is this a time right now to have the highest real interest rates, the difference in inflation and interest rates? If you had to cut 1%, 100% or 1 percentage point now, and what that would do to free up people to be able to pay off debt, to be able to afford their mortgages, I don't know. And I have to tell you, I started my first job was at the Free Market Foundation. I should just mention that. So I understand the importance of inflation targeting and all of these things. I do feel that maybe given where we are in our economic development, given the pressure on South Africa, we are maybe a little bit too aggressive in our interest rate and inflation targeting. I would say that would just be something that I think could be a quicker way to get there as well. But obviously, but of course, cutting budgets in governments takes a lot of time. It's not unfortunately something they do overnight.
We can sort it out in 60 days under debt to you, man. Maya. Come on. Yeah, but Maya, definitely actually don't think 1% will save us. I think last year, September, I looked at some of my middle high-end consumers, and if they all had a 3% reduction at the beginning of last year, they wouldn't have been with me. I estimate about 5% cut on bonds and vehicles and the credit cards, as you mentioned, that will save it. And if we go back to basic economics, inflation wasn't caused by the normal things. It was caused by the fuel price and the fuel levies and all of that. If you look at pre-COVID, 13 Rand a litre, after COVID, 21, 22 Rand, what caused inflation? I'm not sitting with numbers every day, but that is what caused our inflation. So if they cut the fuel price, that would have saved most of the consumers. But I think 5% cut in interest rate will save us, but that will never happen.
That will definitely not
happen. So
that would have other consequences.
Yeah. So I don't know.
So Casper, whenever I actually have done a series of videos recently on this, and the retirees get cross with me because they said that we like high interest rates.
Yeah.
It's been level with them. So there is a balancing act within that.
So in this economical times we are in, so the consumer, what do they have to look forward to? Are there anything, is it cheaper Chinese cars where they get more bang for their buck? Or what can they look forward to in the future?
Definitely cheaper Chinese cars. That you say that, but we're going to be relooking our trade agreements with people outside of America. So that's going to be an interesting, and we'll see what comes out of that. But I do think we need to see economic growth. We keep saying that, but South Africa seriously has to start saying economic growth above everything else. Because if you have a household of somebody earning 25,000 Rand a month, that person's under a lot of pressure. But if there are two people earning 25,000 Rand in that household, they're now at 50. If they're adult children who are still living at home because they can't find jobs are also earning 25, you can really have a multiplier effect within that same household. Instead, what we're seeing is the one person earning 25 supporting 5 or 6 other people. So until we start getting jobs going, we're not going to solve this problem. So actually, it's not only just cutting costs of government, it is so much about economic growth. And I just can't understand why we continue it as a country not to make that our number one priority and to say everything else comes second, because nobody wants to live off a social grant. They want to have a job, and they want to have a reasonable job, the reasonable income. And you can do that through economic growth.
I will just say historically, if you take a time period where you have a significant war that upsets the global economy, and then you have let's say a pandemic that sweeps across the world, and then you enter a period of popular leaders who have extreme views and maybe some sort of tariff war, the thing that happens next is the Great Depression. Unfortunately, historically, just looking back. So I'm worried, Corrie, that we don't have anything to look forward to. That's what I'm stressed about. I think that, do we get to the situation where everybody has to go under debt? Is that what looms ahead?
If we drop bottom, then we can only go up from there. And unfortunately, I think that is where we as South Africa are heading at massively. Talking about Chinese cars, it's cheaper to bring them in than to actually build them here. How is that fair? How can we build cars in South Africa, but they are too expensive and we have to now buy Chinese cars? So maybe Trump needs to come give our politicians a bit of a thing about this tariff and tell them how to start negotiating. It's probably not the answer, but at least that will give some inflow into our country, and we need to create jobs. We need to create it desperately. And how do we do it? Small and medium businesses. It's not the large guys that's going to keep us afloat.
So how do we make debt counselling the go-to instead of a fallback in South Africa? It does work for the consumer that is committed. Debt review does work. We love debt review because We've been in it. We've lived our lives in it for the last 17, 18 years. So how do we make it the go-to instead of just a fallback?
We create trust in the market. Currently, that is missing. We create education. And if you look at the NCA in its whole, even Section 85 allows any court where the claim is that I'm over-indebted, I can't afford my debt. Even if there's legal action, that court can refer that matter to a debt counsellor. So if we start with maintenance, we start with applications in our court where a house or a car is involved, and there's so much trust that a judge or a magistrate can start referring matters to debt counsellors because they trust them. We will not have this discussion. Consumers will be coming for debt counselling that need it. We're going to be too busy just with the court system, just with what's happening in the courts. We won't need call centers. So if we can build that trust and the education goes with it, I think the whole relook needs to happen, and I believe it is happening on debt counselling education. Not every Japanese friend can become a debt counsellor. That will sort out a lot. Further education in the debt counselling industry, ongoing education is very important. I know, Zach, you do it a lot with your workshops, but that is needed and that needs to be forced onto debt counsellors. And if we don't do it as industry, trust is never going to happen in the market.
I think completely. I think it's trust. And I think also what we're going to start seeing is that, Zach, you painted a very bleak picture. And I think the odds are the bleak picture is probably higher probability at the moment. And if consumers understand that there's not going to be a miracle, that you need to start doing something now, because how many more articles can we write about tightening your budget? If you are now at a point where you're hoping that some miracle will happen, it's probably not going to happen. So if you're needing a miracle to get out of where you are, then maybe you need to be contacting a debt counselor. But of course, please make sure you're working with an ethical debt counselor and not one that was recommended to you on TikTok or that phoned you to tell you that they're working for the NCR. There are many good people out there, aren't there, Casper? And I think if we can get that through to consumers to rather take action now than sit there waiting for a miracle.
Yeah, I'm just worried that all the rich people are building spaceships with the intention of leaving. And that's never a good sign. You know?
Look, I'm just saying there's some people who I wouldn't mind seeing on a spaceship right now. It could be just hurry that one along.
One more thing that I wanted to ask now. Let's look at a consumer that's been under debt review for 4 or 5 years. They didn't get any decrease in their interest rates. So their term is not the 4 or 5 years that the DCRS might get them. They've been in debt review for this space of time. Now, their salaries might not have increased. Their debt repayments might have increased because of an annual increase. But how do we tell those consumers to carry on paying debt review and cut down on living expenses when you've already cut down 4 or 5 years ago? How do we handle those situations?
I take it that question must be for me.
I think so, yes, please.
Corrie, that's very difficult, and we sit with that a lot. And this is now where I must take my hat off to some of the bigger banks. They do step up when they can see this consumer has really been committed. They've paid, and I've had a number of cases where we need to take those to, these aren't the normal scheme of things. Bank, please relook. Most of their debt is most likely with one of the banks, especially when you're talking to the middle high end guy that needed to have increases with their vehicle. And I've really seen banks coming to the table because they need to get these consumers back into the market. I think over the last 3 years, banks have realized if we don't get these consumers through the market, they're going to sit with no clients, especially the middle high end guys. The lower end, I'm really concerned about. However, the minimum wage that I've seen increased in that bracket has helped that lower end family a lot. Unfortunately, I'm sitting in the Eastern Cape. I'm seeing exactly what Maya said earlier. One income feeds a minimum of 6 months. I've had hard conversations with some of those consumers to say, listen, you can't keep on sending money home because if you're going to keep on doing that, the money that you are earning is going to go away. And what then? And then you won't be able to even send 100 Rand home. So you're going to need to cut what you are sending home. You need to start looking at yourself, fix your situation so that you can start providing again. those aren't conversations that consumers want to hear, and they get a lot of pressure from family members. We're sitting with a situation where a social grant is becoming what the norm is. And that social grant doesn't really just come from government. It comes from my family member that's earning the income. So if you're sitting at home and you getting 1,000 or 2,000 rand a month, why do I want to work? So we're becoming a socialist country that is never good. There's never been a good outcome for any socialist country. So I hope we can turn that around. But coming back to those consumers, you know what, Corrie, I've really seen the bigger guys step up. And there's been good stories. Debt Counselling has a lot of good stories for the guys that stick with the program. The guys that don't stick with the program, those are the guys that screaming loud and post it everywhere on TikTok, on Facebook. So you don't really hear the good stories. And there is a lot of those good stories really happening. So there is answers for those guys. But then once again, you must work with your debt counselor. Debt counselling is about a debt counselor or a consumer. If they don't work together, this process won't work.
I'm going to add in there, because I know this is more of a question to you as all experts in debt counselling. You know, the DCASA the DCRS rules, generally they aim to solve in 5 years. I see debt review plans where they don't go and try and negotiate at all those lower interest rates. And I'm concerned about that. And when you go and do the debt calculation, this person's going to pay it back double the debt, the interest than if they were able to, even if they were able to solve within 5 years, obviously. But solving over 7 years because you're not negotiating the rates is a concern to me. And I know that's totally legal. It falls within, you can't get cross with those debt counsellors, but I'm concerned when I see those kinds of plans being given. Obviously, there's situations where a person, even with the reduction in the debt and in the interest rate, still takes 7 years because of the level of the debt. But when no attempt has been made and they're paying maximum credit card fees and all of that, what's the point of debt review?
Maya, I'm going to now I'll sit on some of the forums that I probably mustn't discuss here, but I'm going to put it out there and put my head on the chopping block. And Tiaan will also be able to probably jump in. But the PDA systems, if we look at the original PDA, the original austerity, those agreements should then only run to the old diploma, to section 1035, including cost, including fees. That is not being adhered to. PDAs do have in their systems that lock that you could put in. I know most of the systems should have it, but Tiaan can speak to that from the DASA side. The consumer would pay back double from the date of default. Now, the question starts being, when is the date of default? So we should be a lot more strict on that, I think, but that's education once again. DCRS also has its flaws currently because once again, we are reactive, we are not proactive. One of the bigger fights is jumbo loans. We're seeing, and Tiaan will probably have better stats on that, but we're probably seeing 40% of consumers entering debt review have as a jumbo loan. Now, if you have an account that's supposed to be paid over 99 months, how do I solve it in 5 years? Even at 0%, they're going to need to pay. So those are discussions that's happening at the forums that we sit on, and that needs to be addressed. We also saw balloon payments on vehicles. Some places giving 50% balloon payment. So even in my DCRS system, now the consumer needs to pay 2,000 Rand more than what he was paying on his original installment. So now most of those accounts don't solve, and we are once again only reactive. We're dealing with it afterwards, and we're not being proactive, dealing with it ahead of time, seeing, okay, this is what's being implemented. How are we going to sort it out within the system? So when we come back to your question, you see proposals being done at normal rates because it doesn't solve other DCRS, or there's the road guys, unfortunately, and I told myself I'm not going to mention the road guys this whole year. Now Maya made me do it, but they do proposals because they want to keep the consumer as long as possible on their books because they're getting money out of that consumer, which is also not right. So once again, our systems need to be aligned. Our education needs to be aligned, and the rules need to be revised, I believe, on an annual basis. Regulation 23A should be revised every year because then less people would be over-indebted, because if a bank actually looks at the budget and then grant credit accordingly, less people would need debt counselling. So we would stop it before it even comes to us, maybe take away our business. But if we don't get those things right, and industry doesn't solve it quickly and proactively, we're going to always have this discussion and this problem. And the consumer, unfortunately, is the one that suffers.
So, can we chat as a whole, the NCR, the PDAs, the debt counselors? Can we, as an industry, have a say against increases and no salary increases? What do we do as an industry? And I think, Tiaan, from a PDA side and from a PDASA side, you are sitting at the BASA, you have meetings with BASA and CIF. What is the chatter around that? Can we as an industry have a bit of an impact on that?
So I think the one thing that I'm realizing is that every organization currently has their own agenda. And it's not necessarily a bad thing, but I do think that there has to be an overall agenda discussion that ties all of these guys closer together. Because I think fundamentally what we're trying to do is we're trying to assist the consumer. So I think there has to be a bit more consumer related discussions around all of these things. I think for the longest time, and I'm going to critique PDASA and myself a bit, but I think a lot of our discussions have for the longest time just been on our own fees. What I realized even yesterday when we were meeting with some of the industry stakeholders is that word sustainability. How does a sustainable model look? Because if each of the organizations is just looking at their own fees, I believe that a study into what is the actual cost hitting a consumer, you might have already done some of these things already. But again, if this is the solution and we want to start looking at a single cost that hits a consumer, right? So let's throw a number there. I'm not going to say this is the actual number, so just don't quote me, but let's say it should be 7%. Why 7%? Because it's not 10%. That's the answer. I don't want it to become an EDC collection method. But then how do we ensure that's a sustainable model, if that's the answer, and that there's no other hidden costs or other revenue avenues going to hit the consumer? So I do think so. So what is the important thing? Guys, we are running highly complex systems that need to comply to regulations, either being the National Payment Systems Act or ensuring that we don't get hacked, we don't have breaches of information, all of these lovely things. These are good things that we are running. It's good things to say to a consumer. We have a consumer now that is fighting with a credit provider, and we can provide them with information dating back to the start of debt review. Yes, they have been in debt review since 2008. Yes, and I'll go back to those are plans that were run before task team agreements, and there should be yearly reviews and all of these things. But we're sitting with a lot of information. That information can be utilized to actually better the industry as a whole. Why? Because information is power. We can fundamentally start looking at how does the industry react differently to the amount of loans. What we can see, even Casper, to your point, DCRS really doesn't solve for when you have a contribution 7,000 and plus. It's not working on all of the vehicles and home loans. But yeah, what is the impact, Corrie? I think the impact is that we can better align, understanding the costs, all of the different costs hitting the consumers, and seeing where we can actually, as a group of organizations, all trying to assist the consumer understand all of our different impacts, from a front-end cost, from a DC cost, from a PDA cost, from an insurance cost, legal cost, all of these things encumbered, and say, listen, this is what we want to do. And again, now people will say, Tiaan, but you're trying to align this with other countries. Maybe let us investigate how those countries implemented it and then move forward.
I want to just jump in there, sorry, because what you mentioned insurance, because this sweating the client for more money is a bit of a bugbear for me as well. And one of them is seeing the insurance costs. And here I'm talking about, obviously, credit insurance, if the client needs it, it can actually be replaced. And I think I've written actually about this in an article before and how it can be more cost effective. But then you go and see a client whose affordability is 2,000 Rand a month, well, that's the agreement. And then suddenly they're being sold a life cover for a couple of $100 onto that. And these sort of tactics, and that's all an attempt by the DC to try and make more money out of the client. And I think we're dealing with people who don't have any money because that's why they are under debt review. So I am very concerned about and then you see, of course, the reckless lending, the ones who decide they're going to do reckless lending review on every single client to charge another, whatever, 1,500. So I think that's something where you as a consumer coming in know what you're in for and it's standardized. And there's no upselling of more products. yeah, I don't know. I get concerned when I see that kind of layering of cost.
Maybe you've got an external view of this, and it's quite nice for us as a group to ask you, do you think at the moment consumers see debt counselors and the ancillary services around that as fighting for their right?
Not necessarily. Again, it all depends, right? So I've certainly, I think it was Corrie, I think I was dealing with, I sent someone to you, but we certainly see opportunities there where the debt counselor is fighting for their rights and is assisting them. But then I go and I see the sales tactics, right? The leads that are sold. And suddenly I had a consumer who had a call, we won't mention debt counselors here, had a call saying, you need life cover. The guy didn't have kids. He had no family, but then they gave him life cover for that if he died, it went to his mother. He didn't need that. He didn't need it. And yet he was sold it. So you just start to become this lead generation. And I have such big issues with that. That's not ethical. So I think it is, again, all about the ethics really and the morality and treating your client fairly. And what do they actually need at a time when they're trying to pay off debt? Probably more life cover is not part of it.
It's depending. Luckily, I'm not an insurance provider, and I'm not. I think that treat your customers fairly is a good statement. I think if we know, I'm going to use somebody in my family. Unfortunately, we needed to do a bit of an evaluation there, and we could very quickly recognize that they're spending way too much money every time they stop at a gas station, right? So rather buy groceries one time a month, because every time you're stopping, you're getting a coffee or something like that. And that just racks up the cost. But sometimes people make very poor financial decisions. I do think, again, there's a lot of things that we need to do to assist with financial education. A debt counselor has a moment where they can do a review. And like Spider-Man says, with great power comes great responsibility, right? So if I realize at that point that somebody, let's say, doesn't have funeral cover, and that might immediately affect them in the future if something should happen, I think treating your customer fairly would be to say, listen, there's a gap. You should probably fix it. And this is how we can think about fixing it. So it's not incurring more cost, because if I can save them, and then I'm just going to say that in the long run, then it's going to be fair. So I've saved them on the insurance premium R1,000, and we can see there's a gap and there's R100 that needs to be allocated to actually save them from long-term payment. I'm not saying please sell them R1,000 cover. So I think that there should be guidelines on what is their role. But again, a debt counselor should not be on selling insurance. That's unfortunately an FSP role, but it is, how do I identify the right things and what is my motive behind it? I think as soon as they always say you can trace the money. But unfortunately, if you trace the money in most of these things, then they're not going to treat the customer fairly in all of these cases. But also there's probably different ways to look at each case individually. But I think if there's a guide, I don't think the task team agreements is speaking about this. Casper, I'm just looking at you, different avenues of revenue, because money does make people crazy and it does negatively impact. I do see the good that can come out of it. It's unfortunately not necessarily every story that's going to be good.
Think on that, Maya, when credit life came into this space, and I think that's really what we should address. The banks had a monopoly and the banks overcharged. When debt counselling started dealing in this space, competition in my view was always good. Competition creates a free market, but it also gives a space to really look at the consumer, their needs at that point in time, their financial space. Also looking at the future, what does our economy look like? Now, if I'm sitting where I know there's going to be another 700 retrenchments at Mercedes, and my consumer is working at Mercedes, he doesn't have income protector, he doesn't have credit life, he maybe has on one or two things, I'm putting him into the debt review space. What happens next year when he gets retrenched? So yes, there needs to be an ethical space for this. I think the competition in the credit life space has been brilliant for counteracting what the banks are offering, because they were just hitting the maximum. Even before that, when there was no regulations, I mean, they were charging R6-7 per 1,000. This is at least bringing that back. So it has assisted the consumer. Yes, people are abusing it, but like any system, people are going to abuse it. We're also sitting in a system, we need front ends. If Tiaan and the other two PDAs put off their systems tomorrow, this industry is gone. There might be one or two big systems that's going to run it. But what about the front-end systems? The front-end systems have put mechanisms in place to try and stop all of these bad things that happen. And I think there's a big space where through those front-end systems and through the PDAs, we can come back to these grey guys, second time I'm saying it, and we can almost control them through that, and the regulator can regulate them through that, and we can get rid of that. But unfortunately, all of this costs money. There hasn't been increases in fees. Small debt counsellors are dwindling. PDAs are suffering. They can't afford to keep our systems going at the rate. Their fees include that. So imagine this VAT goes in place. Tiaan, am I right in saying that will have a negative impact on your affordability and your sustainability? So where do we put that in place? But once again, we are reactive. We are not proactive. We must come to a state where we, as an industry and as a country, become more proactive. And as soon as things happen, deal with it.
If I can quickly put on my insurance hat, I just wanted to mention, I love treating customers fairly. I love what it stands for. And I think if more debt counselors, I'm not saying all, please don't understand me wrong. There are debt counselors that really go out of their way for the consumer. But if we could seriously focus in the debt review space and to say, do what's better for your consumer, not better for the debt counselor, or not better for the debt counselor's pocket, we'll have a different industry. If this should have been done long ago, it's too late now, in my opinion. But so that's my insurance hat for that. Now back to this. Before we move on to budgeting, I'm not sure about if we have time to go on to the budgeting, but obviously we have a little bit of a magic wand at the Dummies. And I want to quickly pull out that magic wand if I can. Oh, Zach, if you don't mind passing it to me, I appreciate it. Thank you very much. So with our magic wand, we give you an opportunity, and I'd like to go again, Casper, and then Maya, and then Tiaan. If you could change one thing by just waving your wand in the debt review industry, and you can change one thing, it doesn't have to be debt review. If you can have one thing in the economics of South Africa, you wave your wand and it changes instantly, what would that be?
Sure. More jobs, prosperous South Africa, where we can export our expertise, be it services, be it products, to the world. And we've got such a wonderful country, so many different beautiful cultures that go so well together. If we can, as a country, get together and put the politicians one side that just preach the negative about each other, we can come together. I think we can make the world a better place, not just our country. So I'm being very philosophical. What's that word now? Continent. Get it. But I think that is what I would change in the instant. Get together and export all our services and goods. And then all of us will have jobs and incomes, and I won't have a job. So I might need to look at something else. Maybe jump into insurance.
That was a really big wish. I second your wish. I think probably bring it really down to consumer level. I would love a magic wand where consumers understood in their products, and they understood financial literacy, and they understood how credit worked. Because right now, the consumer has very little information. The institutions have all the information. They even have access to information about your behavior. A bank knows exactly how you behave. They have more information and more insight into you than you do of your own behaviors, your own usage of products. And I think there is a huge imbalance, and it's that imbalance that I think often results people in financial difficulty. So I would love everyone overnight to wake up and not need me.
It's also a big ask, Maya. Yeah, I think I share the sentiments of both. I think I have a saying that I live by, and my wife sometimes hated it. It's how do I help? It unfortunately means that you say yes to a lot of things, but I think I share the sentiments. I think there's so many things that we can do differently knowing what we know now. And some of our poorest decisions was made when we were 18 and thought that we were now adults. And a lot of, I think, the consumers that end up in these processes is due to them being approached and they don't have all of the information to make the right decision. While all of the drivers is information, like Maya's saying, is they understand our spending habits and everything like that. And even if they don't have any data on me, they have enough data on my parents to know roughly how I will spend at least for the first 5 years of my life before normal people get married. But it's really looking at that is how do we actually assist people in making the right decisions? And that will have a direct impact on everything. And it sounds very wishy-washy and everything like that. But I think spending 5 minutes with every consumer, almost like a financial advisor, going, listen, do you really need to buy this car now? We had a discussion in our office where somebody went for their drivers recently. They haven't had their drivers for a long time. And I said to them, but how have you been traveling till now? And they said, Uber. I said, sure. We all actually grow up thinking that we want our personal drivers driving us around, and now you have an Uber, but have you actually done the cost analysis? So specifically for us, we don't need to be at the office every day. Now you want to go and purchase a car. You have to have insurance, there's petrol, all of these things. There's going to be a maintenance plan. And if you don't buy that, there's going to be a cost implication for you. And when we actually did the sum, they went, okay, I don't want to have a car anymore. And it's perspective. Because if you actually do it in perspective, is we actually all wanted people to drive us around when we were younger. And now there's all of these Bolts and Uber and Barnatu services that can do that. You have your personal driver. And as long as it's safe, then I'm happy. But it's really just putting perspective on it. I think the social aspect, that would probably be the one thing, magic wand. Don't make decisions on social pressure. Not
Or social media.
Why social media is going to be a bigger ask. But yeah, it's that social pressure that is around friends, around social media. Those are the things that's going to get you into trouble. If you are trying to keep up with the Joneses, social media is not showing you the true reflection of what's happening. Make sure that you're informed of when making decisions. So that in education, we are living in a wonderful country, being South Africa. This is the land of milk and honey. I know it's not true, but it really feels like it. There's so much opportunity here. We should just not waste it.
If we give the wand back to Corrie, let him wave it for a second. What do you want, Corrie?
I think Casper mentioned it earlier, and if I could wave my wand, I would say the 5% decrease in the interest rates. If that changes the whole economic, what do you call it? Economical, what's the landscape? That's the word I'm looking for. The economic landscape changes.
We have to combine it. 5% decrease in interest rates, and all retirees have enough money to live off in their retirement. We'd have to combine
it. Please. What about yourself, Zach?
I would make the AI stop drawing pretty pictures of us as dolls and toys, and I'd make it do farming so we can all have enough food to eat. But yeah, okay, who knows? Corrie, I must say, hanging out with such a nice group of smart people has taught me a lot of stuff today. I feel a little bit smarter than when we began. How about you?
Absolutely, Zach. It was so nice having our guests on today. We can learn so much from them, and thank you very much for all of you spending some time with us. Zach, thank you for your time. Maya, Tiaan, Casper, thank you very much for your time. Thank you to our listeners, and we'll see you on the next episode of Into Discussions with Dummies.